How's it going, guys? Chris here. Today we're going to be watching a video. Millions of Australians are about to lose their homes. Pretty doom and gloomy, but it's probably true, to be honest. Like, mortgages are extremely high at the moment. We're on the brink of a recession. People lose their jobs. Mortgage stress is going to go through the roof, and I don't know how many people are actually going to be able to afford to keep their mortgages. And especially when it makes sense to, if you have a shit ton of equity in it, just get rid of it, Let's get into it. Make sure to subscribe if you've watched a couple videos before and you're not subscribed.
The Australian dream of home ownership is collapsing. For millions, the roof over their heads is about to become a casualty of a system deliberately designed to fail them.
Can it get much worse? Like, what am I going to do?
I don't want to end up on the street, but that's how I'm seeing myself.
I'm seeing a lot of stress, a lot of disappointment, frustration. I've decided to suck it up and pay the extra.
There's literally no hope for me.
The clock is ticking and I'm just quite fearful.
I feel like I have a mother that has failed her kids.
Becoming a homeowner is slipping out of reach for many Aussies as the cost of real estate rises and wages don't keep up.
For generations, owning a home has been the cornerstone of the Australian dream. It's meant security, stability, and a place to raise your family. But today, that dream is turning into a waking nightmare for millions. The signs are everywhere. Mortgage stress at record highs, a cost of living crisis that refuses to budge, and a housing market that seems to defy gravity. You might think your home is safe, that your mortgage is manageable. But what if I told you that the very foundations of Australia's housing market are cracking, and that millions of ordinary Australians could soon find themselves without a place to call their own?
It's already happening, right? Like, you look at homeless rates since COVID and they've gone up so much because, at the end of the day, most people can't afford a $600 rent. That's pretty much your minimum these days is $600. And, when your minimum-ish, not even minimum wage, but, your average wage is around $1,000 after tax for 40 hours a week, there's a bit of a shortfall there after you pay your rent, $600. It leaves you with $400, $200 on food, $200 on electricity. Nah, not $200 on electricity, but like the rest of your bills are easily $200, and you can't do anything. You won't be able to go anywhere, do anything. You just live at home, and yes, it's manageable, but what's the fucking point of that? That's not living, right? That's surviving. That's like the statistic says that we're like living 1970s standards of living. People are going hungry, people are starving, people are going homeless, all because everything's gone up so much and wages haven't increased. The only thing that's really gone up are assets. So, the richer are getting richer and the poor are getting poorer.
It isn't fear-mongering. It's a cold, hard look at the economic realities deliberately ignored by those in power.
That $30 is more than her pension can stretch, so she's looking to move elsewhere.
Now I started doing that in last September, and I just can't find a property to rent that's affordable for me.
Even in regional areas.
And I applied for 10 properties in that area, which were really affordable, and I thought that I'd be really happy living there. And I was passed over every time.
By the way, if you're new to the channel, subscribe now for unfiltered truth about what's really happening to our country. Chapter 1. The Crumbling Foundation. Beneath the veneer of stability, a silent crisis is brewing. Mortgage stress is not just high, it's at levels not seen since the global financial crisis. Data from Roy Morgan shows over 1.6 million mortgage holders were experiencing mortgage stress in April 2025. That's nearly 1/3 of all Australian mortgage holders. Consider Sarah, a nurse from regional Victoria. She and her husband bought their modest home 5 years ago, stretching their budget. They've cut back on everything. No more holidays, no new clothes, even rationing heating in winter. Yet every month, the mortgage payment feels like a heavier stone around their necks. They're exhausted, constantly worried, and the dream they bought into is now a source of immense anxiety. This isn't an isolated case, it's the lived reality for millions.
We did this research back in 2017, and back then, on the average income, an Australian could buy around 40% of the suburbs within Sydney. And that's for houses. For units, it was around 34%, but that's actually dropped to 11% for houses and units. So it's a really significant difference. It means that buying a home in Sydney...
I think it's literally zero now. You can't buy it. Like, Sydney is the most unaffordable city in the world. It's like 14 times the average median income. It's not even possible anymore. It's not. It's ridiculous.
Is just even less affordable than it has been for a number of years. So it's easy to see why first home buyers are feeling really disheartened and disenfranchised and feel like it's not really an option for them.
The recent RBA rate cut, while offering a tiny reprieve for some, has also reignited a dangerous fear of missing out, FOMO. It's pushing new buyers into an already overheated market, often at the very peak, believing they must...
I can 100% agree with that, right? Like, these rate cuts, I'm, 23, and I'm like, I'm keen on getting a house, right? I got a deposit almost there. But you're looking at the signs and you're like, fuck, everything's so expensive. And it's like, can it keep going up? Especially when we're sort of like on this brink, on this edge of a recession. Like, if we go into a recession, there's no way these house prices are going to be able to stand up. Like, surely they're going to come down like 10% at minimum. I think it was 2008 in the US, they went down by like 50%. In some areas, it's comparable, the signs that we're seeing here, right?
Now or miss out forever. This cycle of desperation and inflated prices only sets up more Australians for future failure. Chapter 2. The interest rate squeeze. The Reserve Bank of Australia's decision to cut interest rates to 3.85% in May 2025 was a small breath of fresh air for some, but for many it's too little, too late. Since May 2022, the RBA hiked rates by a staggering 425 basis points. For a typical $600,000 mortgage, that meant an increase of over $1,400 in monthly repayments.
According to the futures market, there'll be 3 more cuts at those 5 meetings, for a total of 5 this year. And that'll bring the RBA cash rate down to 3.1%, and the standard variable mortgage rate down from just above 6% to just above 5%, as long as the banks pass on all the cuts, that is, of course.
Even with the recent cut, rates are still dramatically higher than when millions took out their loans. And the fixed rate cliff is still a terrifying reality. Hundreds of thousands of fixed rate mortgages taken out during the pandemic's record low rates are still due to roll off onto much higher variable rates in the coming months.
I would have thought those would have already rolled over, but comment down below if you know whether the fixed rates have rolled over. I didn't think you could get more than like 3 or 4 in Australia, but yeah, considering it's 2025, I thought they would have all rolled over by now.
The Commonwealth Bank estimates around 880,000 fixed-rate loans will expire by the end of 2025. Imagine your mortgage payment suddenly jumping by 40% or 50%. That's the reality facing many. I recently spoke with a community worker who shared the story of a single father in Western Sydney. His fixed rate expires in August. His repayments are set to jump by $1,500. He's already working 2 jobs, skipping meals, and relying on charity for his kids' school supplies. He's looking at selling his home, but the market uncertainty means he might not even break even. For him, and for countless others, there is no more fat to trim.
And that's the problem. I did a video the other week, and it was about how like realestate.com is like a rort, right? It's just overcharging like tens of thousands of dollars to advertise your property on there. So that's the problem, right? Like these mortgages, like it's a stress to have them, but also to sell the house, it's expensive just to sell it, right?
The whole idea that you would let people borrow more on lower interest rates, I think it is really quite dangerous.
Chapter 3. The Debt Time Bomb. Australia carries one of the highest levels of household debt in the developed world. Our household debt-to-income ratio sits at a staggering 185%. This means for every dollar Australians earn, they owe almost $2. The vast majority of this debt is tied up in mortgages. This isn't just a statistic, it's a massive vulnerability. When incomes are stagnant and the cost of everything else is soaring, that debt becomes a crushing weight. People are using credit cards to pay for groceries, taking out personal loans to cover utility bills, and even dipping into their superannuation early. This isn't financial planning, it's desperation.
Even more concerning, 42% admit to missing at least one repayment. Looking at the generation divide, Gen Z is heading into the holiday season with a 111% jump in debt compared to last year, reaching an average of $23,900. That's the highest of any group. And meanwhile, baby boomers have the lowest debt at $7,200.
The problem is compounded by the fact that many Australians bought homes at inflated prices, often borrowing 80% or 90% of the property's value.
Even 5%, like if you do first home buyer, schemes and buy a brand new house, you do it as little as 5%. It's insane.
If property values were to fall significantly, millions could find themselves in negative equity, owing more than their home is worth. This makes it impossible to sell without incurring massive losses, effectively trapping them in a debt spiral. We've seen this play out in other countries during financial crises. When people can no longer service their debts and they can't sell their assets, the only option left is default. And when defaults rise, the entire financial system feels the strain, leading to wider economic instability. Chapter 4. The relentless income squeeze. While debt and interest rates have soared, incomes for most Australians have barely kept pace. Wage growth has consistently lagged behind inflation for years. In the year to March 2025, inflation was 3.6%, while wage growth was 4.1%. While wage growth finally edged past inflation, the cumulative effect of years of real wage decline means households are still significantly worse off.
Budget that delivers generational debt without the generational dividend. $1 trillion in debt and growing, deficits as far as the eye can see, but barely anything else designed to survive beyond the election. And that's the biggest risk in this budget, instead of laying out an economic vision. The government focuses on managing political perception. Both of those were set by Jim Chalmers in May 2021. You've just delivered a budget which forecasts a decade of deficits. $1 trillion debt, the next 4 deficits of $179 billion. My question, Treasurer, is, do you feel like a hypocrite today?
The average Australian family is facing a relentless squeeze. Electricity bills are up by over 10% in the last year. Petrol prices remain volatile. And a trip to the supermarket now feels like a luxury. A recent survey from Woolworths confirmed what many already know. Nearly half of Australian households are struggling to make ends meet, with grocery bills now that...
Yeah, the amount of people stealing from grocery stores because they can't afford groceries is on the rise, and it's only going to get worse because at the end of the day, like, people feel like they have the right to eat, which, I mean, it's fair enough, they do. So they will steal if they have to. Like, if people are desperate enough, they will steal.
Number one concern. I recently overheard a conversation at a school pickup. A mum was telling another how she now makes one large meal a week and freezes portions to save on cooking costs and electricity. She used to buy organic, now she just buys whatever is on special. This isn't about luxury, it's about survival. This income squeeze means that even if interest rates stabilize, the fundamental ability of Australians to afford their homes is eroding. It's a slow, painful bleed that's pushing more and more people to the edge. Chapter 5. The systemic failures.
I think we'll quit this video here. If you want to see the full video, make sure to click the link below. Obviously, yeah, it's looking pretty grim. I'm not sure if it's ever going to tip over. It might just somehow remain. Like, Australia's been pretty immune to recessions. However, we're in so much debt. There's not much government spending ammo left in the bank, right? Like, unless we go into a lot more debt, which our economy's too small to sustain any more debt, right? So it's a risky time at the moment, but yeah, hopefully if you own a house, you can afford it. If not, probably a good time to sell, right? Like, just get out of it. Otherwise you got to work more, right? And like, that's the problem. 40 hours a week is just enough to survive. If you're not working 2 or 3 jobs already, like, I don't know how you're doing it, right? Anyway, guys, if you enjoyed, make sure to like, comment, and subscribe, and I'll catch you in the next one.